Okay, so welcome to the mock paper discussion continuation part, BL6, Management Accounting. So we have to start with the question number 26, and we have another 25 questions to be complete. So here we are going to talk about the control systems, right? So with the variances, we are also going to discuss some control systems. So here I have provided one question. The feedback control system means, okay, so we have basically feedback and feed forward control systems. So feedback, it's all about the part, something that happened, and then thereafter we are going to control it. So let's see what out of these four answers, which one is going to explain it in well. It cannot make corrections until a measurable error exists. Makes a change in output, which is differentiated error. It is always superior to the feedback system in operation. It is theoretically capable of perfect control. So you have given some definitions and we had to select, okay, what do you mean by feedback? So first one, it cannot be corrections. It cannot make corrections until a measurable error exists. So it's like a favorable answer for the question. Let's see the other ones as well. So that means until we complete that particular operation, and after the evaluation or after comparing the actual results and the planned results, only we can make a correction. So it's a favorable answer. Makes a change in output. So here in the feedback system, feedback control system, we cannot make a change in output level. Third one, it says superior, always superior. So there are some instances where we use feedback, but we can't say it's always superior, right? So it should not always superior. We can say sometimes it may be superior compared to feedback, which means directly we can't use this one. So this is not the answer. It is theoretically capable of perfect control. Okay, so in theoretically, this is we consider as not as a perfect control. In some instances, we use this, but this we not consider it as a perfect control. Okay, so then from here also, so as I told you earlier, make a change in output, which is a differentiated error. No, so we cannot make any change in the output, which means for the question number 26, the correct answer is A. It cannot make corrections until a measurable error exists. Okay, so it's feedback control system. Next one, we are coming to the next one, question number 27. Which one of the following is not a basic element of management control system? Not. Okay. So they're asking out of the given activities or out of the given items, which is not an management control system. So let's go with the answers. So they say planning, recording, managing, comparing. Right. So planning, yes, we do. Right. Planning, we do. And recording we do. Managing, of course, it's we do, but it's not a management control system. Okay, planning is a management control system which identify as in the textbook as well. Recording is also that, and comparing is also a management control system, which managing we do not consider it as a management control system. Okay, so which means for the question number 27, the answer is C. Answer is C, managing. Okay, we do planning, we do recording, we do comparing as management control system. Okay. Next one, we have a small calculation. Let's go and see. Our organization is there, Apex Industries. Manufactures and sells a standard product for the local market. First budget quarter just ended and performance summary extracts are given below. Okay, so they have completed their first budget quarter. So now they have given you some extracts from the budget and some actual amounts, because now you see we have some actual results also, because why? We are after the budgeted period. So budget data, actual data is there, and two extracts given, total sales and the material cost. Let's see. The budgeted selling price of an item was 400. However, the actual reported selling price was 410. Okay. Additional information given for you further, they say at the beginning of the budgeted period, they were planned to sell each item for 400. Okay. But actually, in the actual results, they were able to sell each item for 410. Okay, so that is also information. Let's see why they have given these all information to us. What is the value of material if the company planning to introduce flex budgeting method? So this is a budgeting method that we are using in the organizations, flexible budgeting method. Flexible means what? Flexible means we are going to change the level of activity into different quantities, and we are going to see how this cost is going to be changed. Flex means that. Okay, so we will be preparing the budget. Okay, what if I sell 100 items? What if I sell 200 items? So we are flexing it. Okay, all the revenue, all the cost, we are going to flex it. So now here what they are asking, the company plan to flex the budget. If so, they are asking what would be the material cost that we are going to assign if we need to flex this budget. Basically, to flex the budget, the most important thing is we should know the quantity. Based on the quantity only we can flex it. Okay, so here in this question we don't have quantity. They have given some rupee figures and some selling prices. But using the selling price and the sales, Putala, what you can do, we can calculate the units, sales units. Okay, so we can calculate the sales units. Here they have budgeted for a sales income of 600,000, which they were planning to sell for 400. So then 600,000 when you divide by 400, what you can get your budgeted quantity. That is 1,500. In here, they have earned actually a sales income of 492,000 by selling each item for 410, which means actually they have sold to 1,200. So you see now, from the available information, we have calculated the sales units quantity. They have planned to sell 1,500 units, but actually they have sold 1,200 units. So now what should we do? We have to flex this. Flex in the sense they want to flex this for material. Okay, so go and see. Okay, go and see if I am to do 1,500 units, what is my material cost? That is 195,000. So flex means what? So now I'm going to look, okay, if I am to budget the material cost for 1,200, what would be my budgeted material cost? Okay, that is the meaning of flexible. Okay, so then what we are going to do? We take 195,000. We are going to divide it by 1,500. Why? Because they have planned 195,000 for 1,500, right? So which means you will be getting the answer as 130 per unit. Okay, 130. Budgeted material cost per unit is what? 130, which now we are going to flex it for 1,200. So basically what you need to do, 1,200 multiplied by 130. So it's very easy, right? Because our life is here really easy, because why, you know, material cost is totally variable cost mainly. Okay, so therefore just we divide it by budgeted value and we flex it to the actual value. So then what's the answer here? Answer will say 156,000. Okay, 156,000. Okay, so initially the budget was what? Budget was 195, right? But when we flex it to the actual level of activity, the budgeted figure is what? Budgeted flex value is 156,000, which the answer is B. Your answer is B. What we have done, we have flexed the budget. Budget එක අපි flex කරා. 1500 හදපු budget එක අපි 1200 හැදුවා. Basically that. Right? Flex the budget. Okay. So that's for question number 28. Flexing the budget. Okay. So then we are moving to another new section. As you can see, it's LO 3.1.1. LO means learning outcome. So we are going to another section, new section now. So here we need to do some break-even analysis. Okay, let's see the question and let's see how we can answer this question. Assume that as an investor, you are planning to enter the construction industry as a panel framework supplier. Regarding the potential number of forthcoming projects, you forecasted that within 2 years, your fixed cost of producing framework is 4,350,000. Okay, so based on some findings and everything, that particular person or here they are focusing on us. So we have decided or we have calculated our fixed cost will be 4,350,000. Okay, the variable unit cost for making one panel is 3,500. Okay, so you know, we other than the fixed cost, we also have some variable cost. Variable cost here they have presented in the per unit category. To do one panel, then we need to incur a cost of 3,500 as variable. We are planning to sell each panel for 5,000 rupees. Okay, so basically we have the selling price, we have the variable cost, and we have the fixed cost. Then how many panels you need to sell in total in order to start making profits? Okay, so here what we are going to do is, here they are testing the BEP, break even analysis, or we can say break even point analysis. What do you mean by BEP? That is the point where we make no profit, no loss, which means our TR, total revenue, will equal to total cost. Okay, so as a management accounting student, you may have studied an equation which we can put our figures into and calculate this BEP. Basically here, in other terms, they are asking the BEP. They are asking how many panels we need to sell in order to start making profit. Okay, අපි ලාභයක් පටන් ගන්න නම් අපි කීයක් විකුණන්න අවශ්‍යයිද? Simply that. So let's go with the equation. Okay, equation says fixed cost, let me say TFC, total fixed cost, divided by contribution per unit. Contribution per unit is equal to BEP units. BEP units, break even point units. So here what we need is units, right? So here the units are panels. Do I know TFC? Yes, it's given. TFC is there. Do I know contribution? What do you mean by contribution? So we have another small equation to get the contribution working done. So contribution is equal to what? It's SP, selling price, minus variable cost. Okay, this is comes under per unit category, per unit base. So I will say then selling price per unit minus variable cost per unit will give you the contribution. Do I know those information? Yes. They say they are planning to sell each item for 5,000 and their variable cost per unit is 3,500. So which means now you can calculate your contribution. And you know your TFC, so simply you can go and calculate the number of panels that you need to sell at least to start making profit. Okay, so let's put the numbers to the equation. TFC is 4,350,000. Contribution is here you can get the answer 5,000 minus 3,500. It means 1,500. Okay, so we have put the data to the equation. So when you simplify this, you can get the BEP units. That means number of panels. What is the answer? 4,350,000 divided by 1,500. Answer is 2,900. This is your BEP. Okay, this is your BEP. At least to start to make the profit, we had to sell 2,900. Eketh tam profit ganne. It's like zero profit. That means no loss, no profit situation. Thereafter, we can start making profit. Okay, so for question number 29, answer is C, 2,900 panels. Here what we have done, we have performed the basic break-even equation. Total fixed cost divided by contribution per unit. That is question number 29. Let's move to question number 30. It's again comes with the BEP analysis. Let's see what are the information given and what we are supposed to do in this question. Information concerning Max Limited, a single product, is as follows. They have given you some information about a product in the organization. Selling price, variable production cost per unit, variable selling cost per unit, fixed production cost 40 per unit, fixed selling cost 8 per unit, budgeted production and sales for the year are 10,000 units. So here again you can see they have given some same piece of information as above. Selling price is there, some variable costs are there, some fixed costs are there, and the specialty here is all these costs and the revenues are given in terms of per unit category. Earlier you saw overhead cost were, sorry, not overhead, the fixed costs were given for the period, that is for 2 years. But here they have given for per unit, so which we have to convert that to a period. Okay, because to do the calculation we have to convert. So how we are going to convert? They say in 1 year period. So they are saying for a 1 year period they are planning to produce and sell 10,000 units. Which means Putha now you can get this 40 plus 8, 48 into 10,000 will give you the fixed cost for the period. Okay, fixed cost for the period. Here the period they are considering as one. They are considering as 1 year. Okay, so from that calculation you can get the period fixed cost, and here you have the variable cost 12 and 4, and you have the selling price. So from that you can calculate your contribution. Let's see what we need. How many units must be sold if company wants to achieve a profit of 110,000 for the year? So you see now what they say. Now they don't need to just BEP. They don't need to say see at which point I'm making no profit, no loss. They specifically say, look, I want to earn a profit of 110,000. If so, how many units I should sell? Okay, so same equation we can use with some extended parts. Let's see how we are going to use the same equation. So here I will say now expected profit. Earlier it was BEP. Now they say what? They want profit. Expected profit equals what? Expected profit is equals to fixed cost plus, sorry, here expected profit, not expected profit equal units to be sold to earn expected profit, right? Here units for expected profit. Let me see. Units for expected profit is equal FC, fixed cost, plus expected profit. Divided by contribution per unit. So you see the same equation, it has been extended with what? Expected profit. Contribution per unit. Okay, so let's see. What's our fixed cost? 40 plus 8, 48. And they are planning to produce 10,000. So which means 48 into 10,000, that is 480,000. Plus expected profit, they want to have a profit of 110. What's my contribution per unit? It's what? Here you have a variable cost of 12 plus 4, 16. 60 minus 16 is what? 44. So when you simplify this answer, you will be getting the, when you simplify this equation, you will be getting the final answer. 480,000 plus 510. 110. So answer here is what? 590,000 divided by 44. 480,000 plus 110,000 divided by 44. Okay. So here we are getting some decimals. Okay. So we'll make, because here they are asking the units. So units cannot be in decimal. So they have presented the answers in the whole figures. So let's go and round off this answer, the nearest whole number, and present the answer. So the answer says 13,409.09, which means here the answer is there. Answer is D, 13,409. Okay, that means to do a to earn a profit of 110,000, the company should sell 13,409 units. Okay, so this is what? This is BEP plus expected profit. Expected profit. Okay, next one. Question number 31. Here you have given a break-even chart. Okay, so you might have, you should by now, you should know what do you mean by break-even charts, right? So basically we have three charts which is discussed in this scenario. So you can go and refer those. And here you have given some information about a company's break-even chart. So it's a little bit complicated, right? So you can see lines are going here and there. Let's see what's our task. Select the correct list of components denoted by points, right? Denoted by P, Q, R, S, and T. Okay, So first of all, let's go and mark these letters that they want us to define. They want to know P, Q, R, S, T. Okay, so they wanted to know 5 points. Okay, before we go to the answers, we will get familiar with this graph and let's define our own names. Then we will go and see whether our definitions or whether our identifications are okay with the answer. P, the first one. So P, if I go back to the origin of the P, so it's something like this, and there's a zigzag, and starting from 0. Okay, this P line is starting from 0. Okay, so which I will see this as my sales, because you know either sales or my variable cost should start from the 0. Okay, so variable cost එක මෙච්චර ලොකු වෙන්න බෑ. Okay, so therefore I say this as what? My sales. Go along with the Q line. So I'm going with the next other main line. I'm going with Q. So you see, Q has started somewhere in the y-axis, which means this is having some cost at 0 level of activity. අපි වැඩ කරේ නැත්තත් අපිට cost එකක් තියෙනවා කියන එක තමයි මෙතන මේ කියන්නේ. Okay, so here we cannot say this is revenue, right? අපි මේක එකක් විකුණුව නැතුවම අපිට සල්ලි හම්බෙන්නේ නැහැ. Okay, to start our revenue generation, we have to gradually increase our sales. But here you see, this is, I will say, my total cost, TC. R, next one is R. What is R? Again, it started from 0, but not revenue. Revenue name or sales name. Then this should be obviously what? This should be obviously variable cost. Okay, it's varying, constant ne, vary වෙලා තියෙනවා. And it's below the other two lines, which we say it's variable cost. Next letter is S. What is S? S, they are defining, look at very carefully, they are defining the gap in between TC and VC. Difference, ne, basically difference එක. TC එක සහ variable cost එකයි කියන්නේ. ඒ දෙක අතර තියෙන වෙනස මොකක්ද? ඔයාලා දන්නවා මේ equation එක. TC equal FC plus VC. So now you see, in between TC and VC, what we have this fixed cost පුතේ. S එක කියන්නේ fixed cost එක. V කියන්නේ fixed cost ද? V කියන්නේ fixed cost එකක්ද? නෑ. V කියන්නේ fixed. ඒ V line එක හොලා තියෙන මේකට. Sales line එකේ. හැබැයි S එක තියෙන්නේ total cost line එකේ, right? So S is what? It's fixed cost. Last letter T. What is T? Again, it is a gap. මොකද්ද මේ gap එක? අපි බලමු චුට්ටක්. මේක clear කරලා. So the gap says the lines besides the T is sales and the cost. Sales එකයි cost එකයි මැද තියෙන gap එක තමයි මේ කියන්නේ. Profit or loss නේ. නේ? Cost එක සහ sales එක අතර තියෙන වෙනස profit or loss. දැන් අපි define කරමු මේක profit එකද loss එකක්ද කියලා. What is the above line? Above line is the cost line පුතේ. Below line is the revenue. That means at this time, my cost is higher than my revenue. This is a loss. T කියන්නේ loss එක. T කියන්නේ loss එක. So we have the order is now sales, total, not total cost. Yeah, sales, total cost, variable cost, fixed cost, and the loss. Sales here they have mentioned it as revenue, same meaning. Revenue, total cost, variable cost, fixed cost, and the loss. I think answer is the first one. I think answer is the first one. Question number 31. Let's go and read the other one also. Revenue hari, total cost hari, variable. Here they're talking about contribution. Contribution contribution is the difference between sales and the variable cost. May weekly contribution එක. මේ sales සහ variable cost එක අතර තියෙන gap එක තමයි week කියලා කියන්නේ. හැබැයි S කියන්නේ මොකද්ද? Total cost සහ variable අතර තියෙන වෙනසට. That is fixed cost. So others are wrong. So you can see the answer for the question number 31 is A. Revenue, total cost, variable cost, fixed cost, and the loss. Okay. So we are on the next question. Question number 32. Margin of safety is a term best described as the excess of. In short term, we call this margin of safety as MOS. Okay. So MOS is, we can say it's extra units, or we can say rather extra units, we can say the number of units in between the BEP and the budgeted sales units. Okay. So let's say we are budgeting to sell 1,000 units. And we have calculated our, this is budgeted sales, BS. Okay. We have calculated our BEP, break-even point. We calculate, it's like 600. So then my MOS is what? My MOS is 400. 400, right? MOS is what? It's 400. It's simply what? The number of units in between BEP units and the budgeted sales unit. Okay, so let's go and see the answers given. Margin of safety can be described contribution margin over fixed expenses. No, we are not talking such things. Total expenses over break-even point. One part, okay, break-even point, yes, we do also consider the break-even, but not against the total expenditure. Sales over the break-even point. It sounds like favorable, ne? Sales in the sales in the sense it can be sales units or sales in rupee value. Sales over total cost. Okay, so no, we are not talking about the cost and the sales. Okay, that is that would be for profit calculation. So favorable answer here is what? Answer C. Sales over break-even point, we call it as margin of safety. Okay, or we can define it as difference between sales and the break-even point is margin of safety. So 32, question number 32, the answer is C. Sales over the break-even point. Okay, so we are on the next one. Next one, you have given some information about a company, and this company is doing 3 products, namely A, B, and C. And they have given you the consumption and the demand and the contribution per unit. Now you know the meaning of contribution per unit, that is selling price minus variable cost per unit. Okay. This company used basically 2 materials, Y and Z, Y and Z. Demands are there. This is for 4 weeks, 1 month. Monthly demand given for the 3 products, and contribution also given as 10, 8, and 9. As the records, material Z has a limited supply of 2,500. So now what they say, during the coming month, they have a limitation of supply in the material Z for 2,500. For sure, that means we need more than that. That's why here they have identified this as a limited supply. So quickly go. Let's go and see how many kilograms we want. Material Z. So in A, what happens? They need the demand is 250, which each item need 4 units, 4 kilograms, which means we have to have 1000 here. 250 into 4. The next one, B is what? B says they have a sales demand of 300, which they need 2 kilograms for each, which means 600. Okay. Then the other one is what? Other one, they have a sales demand of 400. C, each C is consuming 3 kilograms. That means 400 into 3, 1200. Okay. So you see, you are getting an answer of 2800 as the requirement. To meet our demand, we should have material Z 2800. But manager or the company says, look, you have only 2500, which we call it as a limiting factor. Okay. So what button, even though we have limiting factors, you know the objective is what? We had a profit maximize. Okay. So therefore, what we are going to do, so they want us to do, in what order should the products be manufactured, assuming that company wants to maximize profit in the next 4 weeks. So now they're asking, so what is the items, what are the products that we are going to produce in order? Just not they're asking just the product, they want to know the order of producing these items. Okay. For that, what we are doing is, we do a small calculation here. Addition to the contribution per unit Putala, we do a calculation called contribution for limiting factor. Here you know limiting factor is Z. So therefore I will say contribution per CKG. එක kilogram එකක Z kilogram එකක contribution එක ගන්න යන්නේ. That means if I use 1 kg of this particular material, what would be the contribution I'm going to earn? Okay, so it's simply existing contribution is there 10. We are going to divide it by 4. 8. Okay, so to earn, basically here what they say, to earn 10 rupees they need 4 kilograms. So then I'm looking at, okay, from 1 kilogram, what can I earn? I can earn 2.5 of rupees. Here what happened? 8, 2. Because from 2 kilograms, they can earn 8 rupees of contribution. So which I'm converting to 1 kilogram, 4. If I use 1 kilogram in B, I can earn 4 rupees of contribution. Here also, total contribution per unit is 9, which I'm going to divide it by 3, 3. Okay, so now the bases are same. Simply, if I use 1 kg to A, I can earn 2.5. Same kg to B, I will earn 4 rupees. Same kg to C, I will earn 3 rupees. What's our objective? Our objective is maximization of profit. Which means then I like to start my production with what? Highly contribution generation product. Okay, contribution. So another name for profit maximization, Pute, we can say it as profit contribution maximization, right? So therefore, I'm going to start with the product which generate me the maximum contribution. A, no, not A, B. I'm going to start with B. Then if I have raw material further, I will go and do my production in C, because next highest is that. After completing the demand for C, if I'm further have some material of Z, so what we are going to do, I'm going to do A. So this is we call ranking order, or ranking, we can just say ranking. I will do B first and C and A. So look at the answers given. Answer is A. Ne? So they are asking the order, in which order we should start our production. So we have to start with B first, then C, then A. Okay. What we have done, we have calculated the contribution per limiting factor, and based on that we rank from highest to least. And then we start to do our production. Highest to least අපි rank කරා ඊට පස්සේ production එක plan කරන්න ඕන. Okay, so that is the answer for question number 33A. Next one, 34. Which of these are not relevant cost? So relevant cost, it's something interesting. So with the decision making, okay, we have to see, okay, what are the costs that relevant for us and what are the costs that are not relevant with our decisions, right? So if you go through the text, you can see they have discussed some features, some examples, the relevant, non-relevant. And here they are asking one question, which of these are not relevant cost? Incremental cost. Incremental cost means what? The cost that's going to be changed. It's relevant. With the decision, if the cost is going to be changed, but it's relevant for us. Committed cost. Committed cost means what? Committed cost means the cost that we cannot avoid. Even we make the decision A or decision B, this cost is there. Committed cost. So it seems like not relevant, eh? අපි decision A ගත්තත් decision B ගත්තත් මේකේන cost එක එකම තමයි. ආයෙක වෙනසක් වෙන්නේ නැහැ. Okay, so let's see. Future cost. Future cost is a relevant cost. Why? Because based on the future expectation, we make the decision and future we can incur some cost. Opportunity cost. Yeah, it's also in management accounting we consider it as a relevant cost. Opportunity cost එකත් අපි ගන්නෙ relevant cost එකක් විදිහට. Okay, relevant cost එකක් විදිහට ගන්නෙ. So which means the answer is B. Not a relevant cost. Committed cost. Not cannot avoid this cost. Decision A එක ගත්තත් B එක ගත්තත් C එක ගත්තත් මේ cost එක අනිවාර්යයෙන්ම අපිට දරන්න වෙනවා. දැන් අපි මේ cost එක ගැන වැඩි සලකන්නේ නැහැ. ඒක compulsory cost එකක් වගේ අපිට. ගෙවන්නම වෙනවා ඒක. Okay, so therefore we consider it as a non-relevant cost. Question number 34, answer is B. 35. This cost refers to the cost which has already been incurred and cannot be altered by any action in the future. Okay, so here it says what? This cost refers to the cost which has already been incurred, done, that is finished now. We cannot alter. අපිට ඒක දැන් වෙනස් කරන්නත් බෑ. පිටිරේදී ගන්න decision එකක් මත ඒක වෙනස් කරන්නත් බෑ. එහෙම feature එකක් තියෙන cost එක මොකක්ද? Opportunity cost, the sunk cost, the variable, the incremental නෙමෙයි, decremental cost. Okay, so what's it? Opportunity cost කියන්නේ මොකක්ද? That is we define as next best alternative that we have foregone because of selecting another best alternative. So which is nothing to do with this we cannot alter, and that is that. Sunk cost. Sunk cost is the past cost. Past cost which we can't change. Variable cost. Variable cost is the cost that's going to be changed with our production. Decremental cost means what? Huh? That means with some actions, the cost is going to be decreased. So what is the answer? Answer is sunk cost, because it's something happened past. Now we can't change it. Okay? It's happened in past. Now we can't change it. So we consider it as, or we define it as sunk cost. Okay? Not opportunity cost, not decremental cost, not variable cost. It's sunk cost. Answer is B. For question number 35, answer is B. 36. Again, there are some questions from relevant costing. QRS Limited has 60 kilograms of material RW in inventory, which was bought 7 years ago for 1,400 per kg. This is no longer used but could sell for 250 per kg. Okay, so they have, this organization is having some material named RW 7 years ago. අවුරුදු 4 කලින් අරගන්න තියෙනවා 1400 ගානේ. හැබැයි at present වර්තමානයේදී අපි මේක ප්‍රයෝජනට ගන්නේ නැහැ මේ material එක. What we can do is, if we really want, we can sell it for scrap value and earn 250 per kg. අපි ගත්ත 1400 හැබැයි දැන් ඒ කොටින් ගියේ 2250ක් විතර. The company is currently pricing a job that could use 40 kilograms of RW. අද වෙනකොට මේ කම්පැනි ප්‍රොජෙක්ට් එකක් කියලා තියෙනවා. එයාලට මේ ප්‍රොජෙක්ට් එකේ විදිහට අපිට මේකේ RW කියන මැටීරියල් එක කිලෝග්‍රෑම් 40ක් අවශ්‍ය වෙනවා. අපි ගාව 60ක් තියෙනවානේ. අවුරුදු 4 කලින් ගත්ත 60ක් තියෙනවා. අපි දැන් එකෙන් 40ක් දාගන්න යන්නේ මේ ප්‍රොජෙක්ට් එකට. So then they asking, what is the relevant cost of material RW that should be included in the contract? If obviously we can use, assuming that that is in good existence, no damage. Okay, physical existence is good. So then we are planning, the company is planning to use this for the new project. So how we are going to price it? Is it each kilogram for 1,400 or 250? So this 1,400 is something sunk now, Pute. We can't change this. අපි 60ක් අරගෙන 1400 ගන්න හැබැයි දැන් ඒක අවශ්‍ය වෙන්නේ නැහැ. So it's a sunk cost. We can't change it. ඒ loss එක එහෙමම තමයි. ඒක අපිට වෙනස් කරන්න බෑ. Okay? With the decision making, අපි මේක either we are taking this for this project or whether we are going to sell for 250, this figure not change, no impact. But impact would happen to here, Pute. So companies planning to sell for 250 per kilogram each. Now, if we are going to use it for the project 40 kilograms, we will be not able to sell that 40, which means we consider that as the relevant cost. What is it? 250 into 40 kilograms. Make a future check. It's a future revenue that we are supposed to get, Pute. It's future which is relevant. So relevant cost only we are taking for the project, that is 250 into 40. What is the answer? Question number 36. Answer is B. 250 into 40 is 10,000 rupees. 10,000 rupees. Okay. So we also have decision tree, right? For the detailed discussions, you can go and refer the decision tree. They're asking some questions, starting from, do we have this material in-house? We have two answers, yes or no. Yes. Can it be replaced? No, because we are not using for current operations. Do I have any alternative use of it? No. Then what is it? It's for net realizable value. Here 250 means net realizable value. The relevant cost is NRV, which we have picked it already, into number of kilograms that we are going to use for the project. 36, question number 36. Answer is B. Okay, we are on to the next one. 37. It's about the labor. Let's go and see. 150 hours of unskilled labor are needed to a contract. Okay. So right now we are going to take a contract which they say we need 150 hours of unskilled labor. The company has 10 unskilled laborers paid a guaranteed remuneration of 16,000 per week for 40 hours. Okay. So right now in our company we have 10 unskilled laborers which we paying guaranteed remuneration. Again, fixed rate. Every week we are paying 16,000. Basically it's for 40 hours of work. Guaranteed කිව්වට පස්සේ, so if they are working less than 40 hours, we can't deduct our payment. Even though they work 20 hours, even though they work 40, not 36 hours or 40, for sure we have to pay this amount because why? It says guaranteed remuneration. If they work for 44, then there might be some bonus procedures, some OT items will be there. At the moment, each worker is working for 30 hours. You see now. They are supposed to work for 40 hours, but they are now working for 30 hours, which means 10 hours they do not work. But what we are doing, we are paying. Right? We can't say that we are not going to pay for them because we have guaranteed remuneration to these workers. ඒගොල්ලෝ පැය 30ක් වැඩ කරා උනාට පැය 40කම salary එක ගන්නවා. Additional temporary staff could be hired at a rate of 255 per hour. අපිට ඕන additional staff එක ගන්න මේ project එකට අපිට ගන්න පුළුවන්. Each hour we have to pay 425. So now what they say, they want to calculate the relevant cost of unskilled labor. Okay, so here we are starting from this 10 hours, which is I see it's as crucial. අපි පැය 40කට සල්ලි ගෙවනවා. හැබැයි අපි වැඩ ගන්න 30ක විතරයි. Which means, so now we can call these 10 workers and say, here you are working only for 30 hours, which you are supposed to work for 40. So we have a new project. Please start work on that as well. Likewise, for 10 hours each, for 10 persons, we can generate 100 hours per day. Do we have a cost for this? No cost. Why? Already we are incurring that cost. නේ 40ක් වැඩ කරලා 30ක් වැඩ කරලා අපි 10000ම ගෙවුවා ඒගොල්ලන්ට. So for this 100 hours, cost is 0. No any incremental cost. Cost එකක් නැහැ. වැඩි වෙන cost එකක් කියලා දෙයක් නැහැ මේ සීට. අපි කොහොමද එයාලට ඒ ගාන ගෙව හිටියේ. Then actually we need 150. If we need to accept this order. හැබැයි අපි 100 then fine කරා. We found 100 from our existing workers. Other 50, what we have to do? It seems like we have only one option further. We have to hire from external, paying 425 each. 425 each. Okay. So if they have given some OT rates and the existing workers are willing to work 40, then you can see whether asking them to do OT or getting new people is worthwhile, and based on that you can make the decision. Here we don't have any options about OT, so then obviously we have to go with some temporary staff, which is 50 into 425. What's the answer? 15 to 425, answer is 21,250. Because here for 100 hours, the cost was 0. For 50 hours, 21,250. Total cost also equal to 21,250. Okay. So that's about the relevant cost for labor. Earlier it was relevant cost for material. Here it is relevant cost for labor. Okay, so section number 38, right? So this is come under project appraisal, right? So here they are talking about payback method. You have given some investment value and some cash flows, which you need to calculate the payback. Payback means it's very basic calculation. We do not discount it, right? We just see how long it will take to cover my initial investment. Payback, from the name itself you can understand. When you will be pay back my invested amount. Diamond Company is considering investing in a following project. The project requires an initial investment of 800,000. Cash flow uh, accrued evenly throughout the year. Okay, so every year we have some cash inflows. Calculate the payback period of the above investment. Okay, for that, what I'm going to do, I'm going to add another section here to do our workings. Okay, so which means I'm starting with 800 minus ne. I will do it in thousands. Because this is my initial investment in year 0. In year 1, they will be pay me what? They will be pay me 250. From 800, I'm able to cover 250. Further, I have to cover 550 at the end of year 1. At the end of year 2, they are again paying me 250. So I'm going to deduct, I'm going to simplify that here. Out of the invested amount remaining 550. So I'm going to pay back, the company will be paying me back 250, which further I am less with 300. Okay. I am less with 300 at the end of year 2. Then at the end of year 3, what happened? I'm going to get 400. මගේ minus 300 දැන් තියෙන cover කරගන්න තව මට තව 300යි cover කරගන්න තියෙන මගේ investment එක cover වෙන්න. හැබැයි අවුරුදු 3 ඉවර වෙද්දී මට ලක්ෂ 4ක් හම්බ වෙනවා. Which means now it will become 100 positive නේ. Minus 300 plus 400 කියන්නේ 100 plus වෙනවා. So which means පුතේ in between year 2 and year 3, that is my payback period. Year 3, year 2 එක නෙමෙයි. Year 2 එකේදී මට 300ක් මදි. Year 3 එකත් නෙමෙයි. Year 3 එකේදී මම 100ක් අනිපර හම්බ කරලා. Payback means when you are going to exactly pay back my invested amount. So therefore, what we are going to do, for sure it should be 2 නේ. 2 complete වෙන්න ඕන but not 3. ඒ කියන්නේ නා දෙකයි මාස කීපයක් අතර මේ ගනුදෙනුව සිද්ධ වෙනවා. 2 plus එහෙනම් මම 2 plus කියලා දාගන්නවා. Then I'm going to see, okay, what is the period in terms of month. Okay, so I need to cover how much? I need to cover 300 at the end of year 2. Year 2 එක ඉවර වෙද්දී මට 300ක් cover කරගන්න ඕන. Year 3 එක ඉවර වෙද්දී මට 400ක් හම්බ වෙනවා. And I simplify it and multiply by 12 because why? We are talking about periods here, the months and years. Okay, 300 divided by 400 into 12 will give you 9. Which means further we can say it's 9 months. Two plus, that means 2 years plus 9 months. What happened? At that day, my payback happens. Whatever I have invested, I'm going to recover it by 2 months, 2 years and 9 months. So you can see the answer is available. Answer is C. Question number 38. Answer is C. Okay. For question number 38, answer is C. Okay. The next one, again, it is two techniques they are talking about that we use in the capital appraisal, or we can say project appraisal. It's internal rate of return, IRR, and net present value, NPV. Okay, so basically NPV, it's all about what? We are going to discount the net cash flows and get the net present value. Okay, IRR means what? We say IRR means what? Which NPV equals 0. Right? Let's see. An independent project evaluation, the results of internal rate of return and net present value leads to cash flow decisions, cost decisions, same decision, different decision. Okay, so here they are talking about some decisions in relevant to internal rate of return and net present value. Okay, so if you are going to perform the both these methods in IRR or NPV, so they are asking what would be our decision. Okay, so cash flow or cost decision. So it's all about from the question. They're talking about the cash flow. They are giving us the cash flow. We can't decide the cash flow. They will giving us the initial investment. So we can't decide it. Okay. So either we have to make a decision whether we are going to make the same decision or different decision using these two models. Okay. So more or less, both these models are talking about discounted values and with the present value, discounted present value. So these both giving us the same decision. Okay, IRR එක okay වෙන එක සාමාන්‍යයෙන් NPV එකත් okay කරනවා. Okay, that we therefore we call it as this, both these methods will lead to the same decision. Same decision, not different decisions. Right? Question number 39, IRR and NPV will lead the investor to the same decision, either to accept the project or reject the project. That is question number 39. Question number 40. A project assumed monetary gain or loss by discounting the entire cash flows and outflows by utilizing the necessary rate of return is listed as. So this is some action that we do in one method. Okay, what we do is we take all the monetary gains, or sometimes it can be losses, which we discount the entire cash flow. Entire cash flow. Discounting means what? We are giving a time value of money. We look at the present value of the cash flow. Right? So it is what? Net recorded cash value, net discounted value, net future value, net present value. Okay? So what is it? So actually we are not that much familiar with these words even sometimes, right? But this is very familiar, and the definition says about net present value. Net present value. Okay. The project assumes monetary gain or losses by discounting the entire cash flow, right? Using the necessary rate of return in listed as. It's net presented value. Okay. So from that, one section is over, right? So it's about a capital appraisal, project appraisal. Main section 3 we have completed. Then we are coming to section 4 from the LOs you can see, right? Let's see what are the testable areas that happen in the LO4. What are independent events? What are independent events? Are you independent? That means what? You are not affected with some other's decision basically. Independent means that. right? In different aspects, we may say that we are independent, right? Normally, we say if you are a working woman, you are an independent woman. We don't need to ask money from others because I am working. That means I'm earning. Independent. So in the probability and in the calculation of risk and uncertainty, so we are considering this kind of events, independent events. Let's see how we can define an independent event. If the outcome of one event does not affect the outcome of another, independent. You see that as I told you, sometimes if you say that you are independent, that means you do not affect from others' decision. Little bit answer is, it seems like answer is okay. Let's go and see the others. If the outcome of one event affects the outcome of another, then it is pure opposite of the previously. That is not independent. It is depend. Based on one event, the other event happen. Okay, so this is dependent. Few of the outcomes of one event do not affect the outcome of another. Not all, some aspects. Any of the outcome of one event does affect the outcome of the another. කලින් එකේ කියන්නේ කීපයක් අර fourth one එකේ කියනවා එකක් හරි මොකක් හරි එකක් affect වෙනවා නම් කියලා. So you see all these three answers goes in the same direction නේ. affect එකක් වෙනවා කියලා තියෙනවා. Okay? Yeah, they say all the outcome will affect, few outcomes, any outcome. But independent is what? Independent is does not affect others' outcome to our outcome. Okay, so answer is A for question number 41, which we say independent event is we consider an independent event as if the outcome of one event does not affect the outcome of another. Okay, so actually, so we can from the set of words given, we can trace the answer in this kind of a question. Okay, අනිත් හැම එකෙම තියෙන පොතේ affect වෙනවා here. Here they say few of the, here they have say not, but here you say few of the outcome of one event do not affect the outcome of the another. Few of not කියන්නේ rest is yes කියන එකනේ. ඒ කියන්නේ භාගයක් affect වෙන්නේ නැහැ. හැබැයි භාගයක් affect වෙනවා. Again it says it's affecting. Impliedly it says affecting. Here it is directly saying affecting. So answer is what? Answer is A. For the question number 41, answer is A. Next one, it's about the its probabilities. Simple multiplication law of two independent events. I directly got this from your study text, right? So they have emphasized the equation for simple multiplication law for two independent events, A and B, right? So here let's say what is it, the correct answer. The first one is says, and this one says as what? It's like we say conditional probability. Okay, so the first one is a conditional probability. Second one is says what? Probability of B intersects, sorry, probability of A intersects B. That is multiplication. Pluses, minuses, normally this is not formal use in probability. Either it is something like this or interconnected or union we are using, right? But not pluses, minuses. So which this is conditional. This is a multiplication. And as I told you, these are not using as models. So which means our correct answer is this one. Simple multiplication law of two independent events presents as probability of A intersect B equal probability of A, probability of B. Okay. Multiple simple multiplication law is answer is B. Question number 42, answer is B. Then another concept is discussed in the study text, arithmetic mean. Okay, arithmetic mean, it's like the way we are finding the average. Average we are adding the total when you are schooling, you may find the average mark. That means you are adding all 10 subjects marks and you divide it by 2, not 2, sorry, divide it by 10 because you have n number of observations. Here also it's same Pute. So arithmetic mean no different. So here what we do is equation is sum of all values. Sum of all values. ඔක්කොම අපි ගන්න observations වල sum of all values එකතුව ගන්නවා. Subjects 10 එකතුව ගත්තා වගේ. Divided by number of observation. අපි කොච්චරක්ද observation කරේ subject 10යි. එහෙනම් 10ෙන් බෙදනවා. Number of observation. Number of observations. So here what they have given. The number of observations are 30 and the value of arithmetic mean is 15. ඒගොල්ලෝ දීලා නැහැ. එයාලා answer එක දීලා අපිට ඇත්තටම නේ. Mean. This equal mean. They have given, look, your calculated arithmetic mean is 15. And we do not know the sum of values. අපි ඒක තමයි හොයන්නේ මම හිතන්නේ. Yeah. Observations are 30. So now how we can find the values, sum of the value? It's simply what? 15 into 30. In maths you may have done. So how to get unknown variable in equation. So this is what happens. So we are going to do, here we are going to multiply this by 30, which this is going to be set off to this one. And same operation we will do it for this side also, 30. So which means then 30 into 15 will equal to x. 30 into 15, I think answer is not for 30 into 15, yeah, it's 450. Question number 43, answer is 450. That is the total or sum of all value from the 30 observations. Observation 30ක results වල එකතුව තමයි 450ක් කියලා කියන්නේ. එහෙනම් 30 අරගෙන අපි arithmetic mean එකක් හදලා තියෙනවා. We have calculated an arithmetic mean. Okay. So that's for question number 43. Question number 44. Question number 44. This is the conditional probability that we have. Let's go and see what is happening. A production manager of Omega Limited has warned that there is a 50% probability of a factory will not complete the order on time unless its workforce improves its productivity. Okay. Manager පොඩි අනුතරංග වීමක් කරලා තියෙනවා. 50ක probability එකක් තියෙනවා. 50ක සම්භාවිතාවක් තියෙනවා. අපිට order එක on time ඉවර කරගන්න බැරි වෙයි කියලා අපේ production එක පොඩ්ඩක් කාර්යක්ෂම වුණේ නැත්තම්. The factory's manager has estimated that the probability of succession of agreeing the productivity deal with the workforce is only 60%. Okay? එතකොට අපි දැන් පොඩි agreement එකක් ගහනවා අපේ සේවකයොත් එක්ක ඔයාලගේ productivity එක වැඩි කරන්න කියලා. වැඩි කරගන්න කියලා. නැගේ ඒගොල්ලන්ගේ සම්භාවිතාව කැමති වෙන සම්භාවිතාව 60%. What is the likelihood that factory will not complete the order on time? Not complete. Not complete කියන්නේ මොකක්ද? ඒ කියන්නේ workforce එක agree වෙන්නේ නැහැ කියන එකනේ. Probability එක මොකක්ද කියලා අහනවා workforce එක agree වෙන්නේ නැත්නම් productivity එකට. Because why? If they have not agreed, company cannot complete the order on time. Okay, so therefore what we do here is we use a probability equation, something like this. Probability of B. because මේක තමයි condition එක. මේක තමයි variable එක. B කියන්නේ එතකොට we can consider it as productivity deal, probability of B. Okay, into probability of A, sorry, into probability of A given that B. Okay. So here, now we are talking about negative side and not be able to complete. B කියන්නේ මොකද්ද? Not agree. Right? So B is what? Not agree. Agree එක 60 නම් not agree probability එක කීයද පුතේ? 0.4. If the company is not agree, then fail rate is what? The companies will not able to face the or complete the order is 0.5. Okay, so which means answer is 0.4 into 0.5 into 100 percentage. Answer is A. Answer is A. It's 20%. Okay, so use the calculators and check the answer. 0.4 into 0.5, it says 0.2 multiplied by 100 to convert it as a percentage. 20% is the answer. Okay, so that's about the probability. Question number 45. This type of risk is avoidable through proper diversification. Diversification means what? We are using several investment plans or investment portfolio to do our investment. We are not just connected only with one source of investment. Diversification means that. අපි share market එකේ තියෙනවා, treasury bills වලත් දාලා තියෙනවා, right? මොනවාද real estate වලත් invest කරලා තියෙනවා. So that which means a proper diversification. So using the proper diversification, so they are asking which risk we can avoidable. අපිට අයින් කරගන්න පුළුවන් risk එක මොකක්ද කියලා. Portfolio risk, it's about the risk that we have in the each portfolio. Okay, so that is we can't avoid. We have it. Systematic risk means what? Systematic risk means it's constant. Samanya risk එකක් මේක ඇඳපුවාම systematic එක මේක. We can't change it. It's the risk of the investment. Systematic risk. Unsystematic risk. Unsystematic risk එක තමයි මෙහෙම එන්නේ. This is unsystematic risk. ඒ කියන්නේ මොකක්ද? අපේ diversification එක වැඩි වෙන්න unsystematic risk එක අපිට අඩු කරගන්න පුළුවන්. So you see the answer is coming here. Right? අපේ investment එක අඩු අපේ diversification එක අපේ number of varieties වැඩි වෙන්න අපේ unsystematic risk එක අඩු වෙන්න පුළුවන්. Okay? Market risk. Market risk is coming from the different markets, whether we are in the share market or whether we are in these government bonds. Okay, so it's there. We can't avoid that. But the only according to this one, the avoidable risk is what? Unsystematic risk. Okay, so please go and see the definitions for each of these risk categories. It's some examples. Okay, so answer is C. Question number 45. Answer is C. Okay, very simple question is there in question number 46. Which one of the following is not a classification of inventory? Classification එකක් නෙමෙයි inventory එකේ. Finished good එක inventory එකක්. Consumables, that is inventory. Work in progress, that is inventory. Fixed asset, we do not consider it as inventory. We consider it as non-current assets. Some inventory we are buying it with the purpose of selling it or make it as making in a term of trade. Inventory හැබැයි fixed asset එකක් අපි purchase කරන්නේ මොකටද? For the usage of the business. Maybe to enhance the performance, or maybe enhance the profitability, to enhance the convenience. So we are using the fixed asset, not to make it as a trade item, right? But finished good consumables, work in progress, yes. What we do is we turn to the trade items and sell it and earn some profit. For question number 46, answer is D. Answer is D, fixed asset. Okay, so then under inventory, working capital management in the study text, so they are talking about free inventory balance. Select the correct equation to express the free inventory balance. That means available, freely available inventory balance. You have given 4 equations, right? So it's something like this. So whatever the material we have in the inventory, okay, we are going to take that, and we have some a promise that we have received from the suppliers based on the orders that we have made. We are going to make it as a positive point, and whichever the materials requested by the production departments but not issued, we have to remove them because it's not free. It has been what? It is requested. It's booked. Available නැහැ එක. නේ? Material requisition එකකින් ඇවිල්ලා තියෙනවා. හැබැයි අපි තාම ඒක දීලා නැහැ. That means it's not free inventory. It's booked inventory. Okay. So therefore, the correct equation to express the free inventory balance is what? Answer comes in first one. You can see material in inventory. We add material on order from suppliers. Okay. තාම අපිට ඇවිල්ලා නැහැ. On the way line. So we have what is the last stages. And we have deduct material requisitioned but not issued. Because we can't make it as a free or available inventory that is already booked, or it has been reserved for the particular production department. Okay, very simple, very straightforward. Free inventory balance is what? Materials in inventory, materials plus materials on order from suppliers minus material requisitions but not issued yet. Okay, for question number 47, answer is A. Answer is A. 48. Overall objective of inventory control is to maintain inventory level so that the total of the following cost is minimized except. Okay, so under inventory control system, so we have EV, EQE, economic quantity order value. So we have those concepts, right? So we ensure that to minimize the cost, right? As organization, we always want to ensure we minimize the cost and we maximize the profit. Okay, so we do these control systems to minimize the cost, except what? You have 4 quick answers: holding cost, purchasing cost, stock out cost, ordering cost. Holding means it's like warehouses, right? Purchasing means the amount that we are going to pay to the supplier. Stock out cost means, so sometimes it's like we don't have sufficient inventory available to do our production. Ordering cost means the process of making purchase orders and get the work done. We have inventory controls for deduct cost or reduce cost, except what put there? Except purchase cost. A purchase cost is it's like a invoice value. Okay, so it's with the market value. But holding, stock out, and ordering, these are some internal costs that we have to face with it. These are some costs that we can manage, that we can control. Purchasing cost, We can't control it. We can negotiate and get some work done, but we can't control that. Holding cost we control can right? So if we see our warehouse is like 200 items only we can store, so then we have to make sure, okay, every time our warehouse should have only 200, not more than that. Why? If it is more than that, so we have to increase our cost. Stock out. So we want to ensure smooth running of the inventory in the warehouses. If our stock is not available, so it's a cost for the organization. Ordering cost, it's again a process. We had to raise a PO, right? So there are some activities. So answer for 48 is purchasing cost. Purchasing cost. Question number 49. You have given some information about a material and you have given some information about the quantities that they have received and they have issued to the production. And you need to calculate the month end balance inventory value based on FIFO method. FIFO means first in, first out. Very simple. Whatever we receive first, we issue first. Okay, FIFO means that. Okay, let's see. Opening balance at the beginning of the month, we have 100 items. Each cost is 60. Then purchase karanawa 300. Each cost is 65. Now you see, issue issue right? When we have issues, you see they have not given the value here. What we have to do is we have to find the value because based on FIFO. We need to issue 200 using FIFO method. Now what will happen? So first in, first out. Therefore, I will issue this one first. issue 160 gane. And from these, what I am going to do, I am going to issue 100, which my balance is what put there 200. Fulfill kara. Okay. සීයක් දුන්න opening balance එකෙන් අනිත් 100 දුන්නා හතර වෙනිදා purchase කරපු වලින්. එතකොට මං ගාව දැන් තියෙන්නේ 200ක් ඉතුරු වෙලා. Next day I'm going to purchase 500. Okay, altogether now I have 700. In next day I'm going to issue 300. 54. පළවෙනියෙන් ආපු ටික පළවෙනියෙන් දෙනවා. So what I'm going to do, 300 ඉල්ලලා තියෙනවා. මම 300 in 200 මෙතෙන්ට දෙනවා, which means it's 0. No value. And from here, another 100 දෙනවා. ඒ කියන්නේ දැන් මං ගාව මෙතන 400ක් තියෙනවා. හරිනේ. මං ගාව මෙතන 200ක් තිබුණා. 200ම දීලා තව 100ක් මම දුන්නා මෙතනින් to fulfill this 300 issue. Next what happened? Next day also we have issue of 200. So previous inventory nahamanga, I have issued everything. I have left with only this. So which I'm going to say 200 gave and balance is 200. Okay. So at 31st October, what I have in my hand is 200 items. Costing is to 70 rupees. So then what is my closing value? Inventory value? It's 14,000. For 200 into 70, my answer is 14,000. Okay. 14,000. FIFO, that means whatever we receive first, we issue first. FIFO method. The last question, the latest cost of inventories are changed to production, but the old prices are changed to inventories on hand. Okay, so they have given the methods average, FIFO, LIFO, and perpetual. So we had to take out which is the definition, right? Which define this. Latest cost of inventories in change in the production. Production කරන්නේ අලුත් පිළිවෙලවල් ටික, අලුත් cost ටික. හැබැයි inventory එකේ තියෙන පාරම cost ටික. Cost නෙමෙයි cost ටික. So what is it now? හැම වෙලේම production එක update වෙනවා cost එක. It's changing continuously. But inventory, it's old cost. It's what? It's LIFO method. Now we are not using that much of LIFO, right? LIFO means last in, first out. Whatever we receive last, we are going to give it out first. So that means, so whatever we produce to the oven, whatever we transfer the production, it goes with the latest prices. And in the inventory, it will be same set of inventories will be available all the time or most of the time, because why? Whatever the new a set of goods come, we deliver to the, or we pass to the production department. Okay, so latest cost of inventories is change in the production, but old prices are changed in the inventory on hand. We call it as LIFO method. Last in, first out. Okay, yeah. So that's the end of the mock paper. Basically, we have discussed 50 questions, for some possible 50 questions. And you see, but there's some need some time, more time. And some questions, it's like theory, which you can quickly do. Okay, so when you are going to do the paper, so you have to make sure you arrange your time accordingly for the calculation questions. You have to consume more time, which means you have to save some time from the theory questions, right? So this is a practice session for all of you before your examination. I think this will add some support to your study work. So let me wish you all the very best for your examination, right? And thank you very much for the cooperation. And I would like to thank you, CS Sri Lanka, for giving me this opportunity. Thank you. And we will meet again in future discussions. Thank you. Thank you very much.